Hello, everybody. Great to be with you. Mike Fairborn here for Swing Trading, folks. Where within this class, first of all, would like to welcome all of you. But we do look at shorter term trading tied in with price patterns. We also look at stocks potentially moving in the same direction as the trend. So specifically focusing in on this class, we like to look at potential bounces, and those would be potential entry points as well as targets. And so looking forward to going through that with you. It's great to have you on board with us today. Just taking a look at the chat, we've got recognized many names here. So a big welcome to everyone in the chat. Do recognize, like I said, many of you here. But if you are new, it's great to have you here as well. We do hold this class, same time, same place, each and every week. So if you're looking for shorter term type price patterns, folks, then a class like this might resonate with you, and you might be in the right place. And so we do hold it, like I said, same time, same place each week. But definitely let us know if you are new. But I do recognize all of our folks that have been here before. Great to have you all on board, folks. I'd like to also recognize a good friend and colleague of mine in the chat, Mr. Cameron May. You'll see him in there with initials CM. Folks, you can also follow us on Twitter, X, I should say, X now. And that's listed up top is the top tweet, I should say, the top chat. You've got my handle there, Mike Fairborn CS, as well as Cameron's, which is Cameron May CS as well. I encourage you to follow us, folks. We do post financial and sort of trade-related concepts on those Twitter handles, X handles. There I go again. Love to have you on board. All right. Well, let's dive into some disclosures because I've got plenty of stuff to look at. Really looking forward to our discussion. The information here is for general information purposes only. It should not be considered an individualized recommendation or endorsement of any particular security chart pattern or investment strategy. Now, options carry a high level of risk. They're not suitable for all investors. Sometimes in this class, we look at options as well as stocks. We're going to be doing some side-by-side comparisons on the very near horizon. But a couple of quick notes there, lines in terms of option disclosures. Also wanted to state that while this webcast discusses technical analysis, other approaches, including fundamental analysis, may assert very different views. The paper money software application is for educational purposes only. Successful virtual trading during one time period does not guarantee successful investing of actual funds during a later time period, as market conditions are always changing. Investing does involve risk, including the loss of principal. Now, a couple of additional quick points. The stop loss order will not guarantee an execution at or near the activation price. Instead, once activated, they do compete with other incoming market orders. And finally, past performance is no guarantee of future results or success. All right, well, moving on into a bit of our discussion here, folks. So within this class, part of the short-term trading time frame that we look at, we do tie in swing trading. Not all short-term trades are swing trades, but all swing trades are short-term trades. And what I mean by that is these patterns that you might see on a chart, and using specifically price patterns such as, and I'll highlight it up top here, the bull flag pattern. The bull flag pattern that you may have seen. And as you look at the chart just off to the right here, I wanted to highlight just a couple of quick points before we go into a review and look at some live example trades here. But as we look at it, the time frame that we're really looking to trade, and looking at potential entries and target levels is going to fall right into this range here. So these are just daily bars that you might see on a chart. Here is a fairly strong move up, something that you might see in a trend. So we're tying this into a trend already that's in existence, and we're looking at the bullish side up top here. As it states bull flag. There is a bear flag as well. We're going to take a look at that as well right after this. It's going to be very, very similar, just everything flipped upside down. But we're tying in the trend, and we're looking at the formation of the trend, where oftentimes the trend will reverse from its counter direction going down and then revert back into its regular upward move, resuming the trend higher. That's what we want to look at here in this class. This is one of the patterns that we look at last week. We also looked at an inverted head and shoulders pattern, but the same idea stands. These are just price patterns that are recognizable and that do move in the direction of the trend and can, through the eyes of many traders, enhance the potential or the expectations for the trend to resume higher at that point in time. Let me clear this off, and I want to highlight a couple of details. Now, there are some notes over here. First of all, yeah, as it states here, let's hit a few of these first. Okay, so the trend, as I've noted already, it is bullish. We're looking at upward moves here. So in the direction of the trend, and we are spotting that flag pattern. Now, the flag pattern itself is denoted over here on the chart on the right, and you can see, do you see the flag? I mean, it's highlighted like this. It's noted for a sharp upward move, very clear and easy to see. The move of the trend going higher, but yet the pullback is much, much more mild. And you can see it coming back down here. Oftentimes it won't even retrace. It'll stay clearly above, let's say a 50% run. Let's do this. Let's just highlight this range. 50% of the initial pull itself. So in many, many cases, it'll hold above there, kind of showing and representing to us that the pullback is not, it's very, very weak relative to the run up, so that in fact there could be an upward move to follow. Now in this class, we'll talk about indicators. I'm going to show a few of those today. On this chart, it's really nice and quite straightforward and easy to see is that, when you're looking at this upward move set to occur, a lot of times as I'm focusing down here, this is volume. Okay, yep, got the volume read right there. Volume oftentimes will go just generally higher over here as the price is going up. And that's just a good thing to recognize, to keep in mind. As prices are going up, the volume is increasing, right? We might be getting more buyers coming in, helping to potentially sustain that trend for further future moves. Okay. Now, on that same pullback, which is more mild through here that we said, notice what volume does conversely on the downside. Volume might start to dip. And so that, volume dropping, which is also a positive too, because when it comes time to sell, you've got the majority of buyers maybe still staying in the stock that got in the first place. But when it comes time to sell, that volume is actually quite weak, relatively speaking, to the upward volume over here, the buyers relative to the sellers. And so therefore, that could help to influence a continuation of the trend to the upside. Now, other indicators help us with that, but it is nice to see just on this chart, we've got a volume that kind of coincides with that. It's a good thing to look at. We've had a couple of classes that talk about volume specifically. Now, a couple of quick notes just to highlight here on our slides. Short term, we're really looking at days to weeks to form. Okay, the formation of the bull flag pattern. A lot of times, traders will look at really a trade after they decide to get in, maybe 3 to 10 to all the way up to maybe 14 days. It's right in that range, 10 to 14, but you can see that it's shorter term. In other words, what we look at in this class is just potentially trying to find the strongest parts of the move of the trend itself and just trying to see where those potential entries might be, where that stock might bounce from and extend up higher. Because I'm sure many of you are aware, and we'll look at it today, but as these prices go up on many of these stocks, they do tend to consolidate over a time frame. But then this time frame, let's just say 3 to 14, 10 days, whatever the case might be, right in that range, it tends to be a little bit shorter. And you see a lot of companies a lot of stocks, I should say, that will fall right into that category. So that's what we're really looking at here. As you can see over here, the construction, the pole, the flag itself is a sideways move. The pole is really strong. We're looking now, I want to talk real quick, since we've got this nice visual here, and we'll look at some existing trades that we've got on, some paper money trades. But it's an entry could be a break of resistance, and sometimes traders will look at actually a bounce as well. There can be a few different entry points right in here on a pullback. Now, the first one I want to highlight for you, and then we'll go into our target here as a quick visual. But the first thing is the possibility of a bounce off the bottom. What does that bounce look like, and what does the breakout look like? A couple of things. So one thing that traders will do is they will look at a close above the high of the low day, a cahold. It's a terminology that's used for a potential entry point, which oftentimes, not every time, nothing's 100% in the market, but can oftentimes signify the change of the move going higher. Let me show you where the close above the high of the low day is. Okay, this acronym. Okay, here's our pullback that's starting to occur. Where's the low day? Well, here's a low day. Did we close above the high of that candle bar? We did not. Here's another low day. Did we close above the high of that candle bar? Actually, we tested it a number of times, but we never actually closed above it. Oh, we get actually a new low that occurs right there, because that's the low day we're looking at. That's this low portion on the pullback. Now, notice you get that low day right here. Notice the next day. Did we close above the high of the low day? I've got to erase a few things just to show it to you, but folks, we actually did. Here is the high of the low day, and that right there is the possibility of an entry point, right, that a lot of traders will look at. Now, that's like a bounce entry, one of the indications that traders will use. And it's really interesting because it does require a little bit of patience, but it can really pay off for those moves that kind of run like that. In fact, we've got another little one just right over here as I peek my head over. Where's the low day? Low day, low day, low day, low day. Oh, you get it right there. There's a close above the high of the low day. It got the trend moving, so to speak, right on this visual. Okay, the next thing is, as it does state over here, the entry can be a break of resistance. Well, a downward sloping trend line being drawn off the highs down through here. You can see that trend line in red. Once we broke above it, which was actually also simultaneously a Cajole that closed above the high of the low day, and sometimes they'll come exactly the same time together, which is fascinating. Not every time, though. But sometimes you get kind of that dual sort of signal. But that's a bit of a breakout here from the trend line. There's one more as well, and that is right over here, breaking above the high. When we talk about a break of resistance, the prior high of the actual flag pull itself, this run, right? This run up here, I should say, starting from here. So starting from here, going on up, that's the high. Closing above that high, there could be an entry point there as well. So there's more than one way to do this. To see a potential entry point, traders have different indications. Some will even use moving averages, and we talk about different variations of that entry and sort of that pattern recognition when the bounce is occurring, those possible entry points that traders will seek out. Okay, now we have to also talk about, one of the really cool aspects, and I think this is so interesting because when we're looking at patterns themselves, we do have down here a target, and you'll oftentimes see that. In fact, that's one nice thing with price patterns. You can get targets. There are a couple of different targets here with the bull flag pattern, price pattern itself. Target number one. So let's just go ahead and highlight this right now. There are a couple of different targets. Okay. Target number one occurs when we break out, I should say, when we reach the prior, what was a resistance level. And so what we're looking at here, I'm just going to flip colors real quick to highlight it. Let's say we did get in on that Cajole or that trend line break bounce right there, coming off the bottom. We have this range right here coming up, 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 up. Some short-term traders, because we are talking about a short-term trade in here, it is short-term, they will have target number one listed right there. So our targets are broken down into target one and target two. Okay, target one would be right there. Now, target two oftentimes could be much, much higher, a bigger run. And target two you get, as it states right down here, is equal, right over here, equal to the length of the pole added to the resistance and oftentimes to the bottom right here. I'm just going to use the bottom for now. So the bottom of that move right there, whatever that low was before we broke out, we're basically going to use this as our measurement point. But we're going to be measuring the price of the pole. So we know over here, we can track prices, right, on our y-axis, right? And this could be whatever it is, $15, let's say, for example. And if this runs up to $20, that's the length of the pole itself. So this is the price action of the pole. It ran up $5. I'm just estimating this right now, just as an example. The pull of that move, the price was a $5 move. It went from 15 to 20. So now what we do for our T2 or our target number 2 up top, we simply just add in the length of this pull in price down to, there's a couple ways to do it. Some traders will add it at the bottom here at the bounce. So at the actual bounce area right here, the bounce low, it's the low, the bounce low, or they could also add it to the resistance breakout. I think the bounce low is probably a little bit more common. And so what they'll do is they'll measure this to that point, and that would be T2 or target 2 right there. Now I've just eyeballed it, and I'm just suggesting over here as I erase everything, because it does get busy on my screen here, but I would just suggest that all we did right there is we just took this pull move in price and we added it to this pull move. And that would be our T2 target relative to our, I should say, compared to our T1, which was over here at this point. Okay, so those are targets that can be taken in the direction of the trend. I really wanted to make this clear because I know many of you are new, and we're going to be looking for examples, and I've got a review of a few different stocks that we've done that I'm going to take a look at real quick. Before we get there, though, let's just quickly show you a bear flag. It's just, folks, everything flipped upside down. Okay, you look for stronger volume as prices are coming down and weaker volume coming up. Notice what's the direction of the trend. If I look on the left-hand side here of the screen, and I look to the right-hand side, whoa, it's lower. It's making lower lows and lower highs. Folks, that is a key difference in recognizing a bull flag relative to a bear flag. So we don't get fooled in case prices are coming down. A lot of traders will say, Mike, I'll tell you what, I'm seeing a bull flag right there. If we just were to take this out alone, can you guys see the bull flag? Up. There it is. There's the bull flag. Oh, shoot. What happened? Oh, the price went in the direction of the underlying trend. In other words, it continued to drop just as a bear flag might do with the underlying trend. We didn't have that issue on the bull flag. The bull flag was this. We're building and we're looking for those patterns in the direction of the trend because we want to look to have that on our side as well, so to speak, right? That potential insight for the possibility of that trend to continue up. All right, so I wanted to get through that. We spent some time, but I want to be very clear on this so that everybody knows that is new what you'll expect to see in this class. There are some really interesting points, as we just saw there, entries, potential entries around bounces and breakthroughs, breakthrough of resistance, and then the beauty of the price targets with swing trading is we're just trying to capture really the big portion, the meat of the move. Look at this on the bear flag side. This move coming down here, we're just trying to get like that big dip right there. We're not really interested in all the maybe sideways action, maybe some of it for entries, but more than anything, we're really just trying to capture that. So I want to let you know that's what you can kind of anticipate to see. Not kind of, that's exactly what we discuss in this class. Okay, Cameron's doing a great job in the chat, folks. I'm going to scoot on right over in here, and we're just going to set up our Thinkorswim. There we go. And I've got it pulled up right here on the S&P 500 index as it stands right now. Now, let's take a look at what we've got in terms of a few additional stocks that we have in our paper money portfolio for swing trading specifically. We put a trade on KR. Let me highlight it for you right now, and you can still see right from here some of the flag pattern moves that I'd shown and highlighted previously. This was the initial flag. Now, it was a little bit longer term because we had this pullback here, and you can see, does everybody see that length of the flag? It's a little bit longer, but we're still looking for a follow-through that could be actually quite sharp to the upside. This was slightly longer. We did see a rotation this week, that particular week when we put it on. There was somewhat of a rotation into some of the staples, and we're still seeing that rotation occur. So in that sense, we called this sample, example trade correctly in terms of it going higher, and it was also tied into some of the, other stocks that are out there in this group with lower just generally, or not as volatile, as other stocks in the general market. But you can see over here, I still have lined up the length of the pole. And all I did was take it off the bottom to the top. And I said, here is our pullback. Here is our trend line that we drew off of highs right here. Here was our trend line break right there. And we actually had a close above the high of the low day on this bar right there, which is the bar that we got in. In fact, we talked about this before in terms of a bounce. A couple things going on. What happened? We just talked about stocks breaking resistance through a trend line. It broke the trend line right there. And then we also had the close above the high of the low day. That's what we had. So we took that price, that entry right there, and notice too, was it in the direction, folks, of the underlying trend? It was. Higher highs, higher lows, there's your pullback, and there's our follow through. Now, in this example, we did say, that prices ran up and they began to trade through some prior highs. In fact, they even broke through these highs over here that we had seen previously. And because this bar was so big, we said, hey, we hit our trade one target, but why don't we just, because we had a big breakout, and we talked about this before, we said, we're going to set a T2 target with the pole over here, which is exactly what we did do. So there was our T2. In fact, I'm going to pull down my y-axis real quick so you can see it. We're almost there, but you can see how high it's run. Now, for some people out there that are just seeing this for the first time, this is actually a flag pattern too, in and of itself. Do you see that? Although we're in an existing longer term bull flag pattern, do you guys see it? There's your strong move up, followed by a very, very mild consolidation. By the way, with this, I got to say, our indicators down here, and indicators can be very, very helpful. We've been talking about this a little bit over the past couple of weeks. The RSI, the MACD 2-line indicators are as well. We've gone through both of those. Indicators are interesting too, because they can suggest a continuation of strength for the stock to move higher. And we saw some good strong follow through with the RSI and the MACD. And now look at it. We've retained a lot of that move. I mean, we barely gave back anything here. By the way, as we're waiting for our target to come up here, we talked about some short-term potential exit points. One of those that we'd mentioned that a lot of traders will use as we are anticipating a trade reaching the T2 level, the target number 2, we'll put on here a 10-period simple or exponential moving average, and we say, well, in case price action happens to suddenly shift lower, we're going to look to potentially exit the trade if it goes below our exponential, our 10-period moving average here. So in a sense, we're trying to really capture that move and not give back gains. And this exponential moving average over a 10-period, folks, it's really moving up nicely, quickly. And in fact, if prices, don't break out, it's going to keep getting closer and closer and closer, and trying to put our level where we would try to potentially get out of or exit closer to where prices are at, and possibly capturing unrealized gains, a little bit more, possibly, as it's just extending higher, because it's looking at the last 10 days. Now we are, this is a paper trade, but that was the trade that we had. How are we doing on this trade? We can look at some of these down a little bit today, but we had just 100 share entry, and it wasn't like a fantastic entry. It was actually towards the high of this bar right here as we broke out, but we're looking for a continuation of the trend, and we got it. But that's where you can check just to see how those paper trades are doing. Okay, so I was just going to say, some traders might even try to get in another bounce trade here and see how that goes, but just because, on a paper money basis, but that looks like another bull flag pattern. A couple more to look at, and we'll go from there. We did do a trade on Amazon. Now, Amazon was interesting. Amazon actually broke out higher, and it did dip lower. What's interesting is we broke higher. Do you see the pull of the move here? That's our pull. That's our consolidation. There's our breakout. And there is our pullback right here. It's still holding, very close to support. It was an earnings move. It didn't move down a ton, but we're still stuck there. Actually, in our trade, we said we're going to keep, on this particular trade, we were going to keep the exits actually fairly close. And so we were right on that bar. Let me zoom into it so you can actually see that a bit better. But we said if we start to trade below the low of the prior day, which was right there, in other words, we were anticipating a breakout trade right here, just to unfold with this longer term move. You know, we thought that the pull of the pattern over here could break higher. We got in off of the bounce, and we did get one confirmatory day, but what does happen sometimes is it goes against us. And so we said if we trade below the low of the prior day as a potential exit level, we would get out. So there's an exit right there. Although, is it still setting up? We're past earnings. Could we still see strength here? And what would that look like if we were to get back in a trade like this? Because we still have the trend. We're holding near support. Where's your low day? There's your low bar right there. That was a big day. That was post earnings, and there's a lot of volume on that day. So what some traders will do is they will wait for prices to get above the high of that move and break higher. And what is that, folks? That is also the close above the high of the low day as an acronym. We don't have that yet, right? We don't have these K holds. That you have to close above the high of the low day right there, which is fine because it was a big earnings day. You'd probably want to get above it anyways, just to see what would happen. Another potential point to look at that does follow along with the trend, there's your moving average. It's sticking out right there. So that too, you know, is very, very close to the close above the high of the low day to get back in. So what I'm going to do is I'm going to utilize some of the technology on the Thinkorswim platform to help us out here. In fact, what I want to do is I'm going to right click right at that level. Let me know if we get above there. So whether you're on a PC or a Mac, just right click, scoot on down to create alert, at or above. And I'm just going to say, we recognize the acronym, close above the high of the low day, question mark. And then what I can do with this alert, which is just fantastic, you can come up top under setup. If you haven't done this before, many of you might not have, you can go to application settings and then just go right under notifications. You can plug in your text or your phone number right there, your cell, and it will text you normally in about 3 to 5 seconds, or it can email you as well. It can also make an alert on your computer that you can hear as well. So that's really great. You know, if you happen to be outside, I mean, I had an alert one time on a longer term breakout. It took something like 2.5 years to break above this sideways channel. I got it after it broke out, honestly, within 3 to 5 seconds. It was right away. And I was nowhere near a computer, but I looked, and sure enough, I got my signal. So just a little quick note there in case you don't want to watch it all day long. You know, you can use that too. Okay, because we could still see, right, the follow through of this potential flag pattern going higher. Okay, I've got a couple more we could look at in our portfolio. They're just kind of hanging in there, a few additional paper trades that we put on, but just due to the time right now, what I want to do is just take a look at our maybe some current trades out there that we could be looking at in the general market. So here is Cisco. All right, let's take a look at Cisco here for the possibility of a flag pattern. And a lot of times on these pullbacks, they can kind of terminate in 2 to 3 days. And I would say 2 to 5 days. A lot of times it is 2 to 3, but 2 to 5 days on the pullback. We might be on number, 2 or 3 on the pullback here. What do you see before it? What's been the character of this trend? Starting all the way back here. When we broke above this range on earnings, it has been a very, very nice series of flag patterns, right? Higher highs, higher lows, and you can make these measurement points in here. You see all the flag patterns of the pullbacks that have not gone back down as far as the length of the pull. And when that doesn't happen, when you don't make it all the way back, by definition, everybody, you're going to have a trend going higher. So if I'm having a nice run, but then I'm not pulling back all the way, and I'm going up again, and I'm not pulling back all the way, and we're basically just defining what this trend has looked like through this whole time frame. a big portion of it. I mean, this was a sideways move, and there's your breakout, right? So let's look at it right here, right from square one. We'll see where we're at. Now, a quick note. We're right here at earnings. This is a big week for earnings. In fact, 78 companies this week in the S&P 500. I took a look earlier. 78 companies are reporting earnings. So being mindful of this is a company definitely in the S&P 500. Cisco over here. What to expect? You might want to wait unless you have, this earnings really resonates with you. You think they're going to have good numbers. I'm just stating this as it would be any company out there. You might want to wait because there could be some volatility. But the company's done pretty well over the past several earnings announcements. It could change very quickly. But let's just look at it right now as a possible entry point. I'm going to kind of ignore earnings. I did want to put a trade on today, but I want you to keep that in mind. And a lot of traders will not trade within that level. So I'm going to put in half a trade. Instead of 100 shares, we're going to do 50 shares today to account for potential risk over earnings. Okay, so here is your run up right there. Here's your pullback. Do we have a close above the high of the low day? Not yet. Now, I'm not going to put the trade on until we get the entry, but I'm just saying, perhaps we do get one tomorrow. I might go ahead and what I do in this class is I'll add the paper trade in if a signal does occur, and then we'll just watch it. Okay, because it's kind of rare that we get a signal exactly in our class, exactly as we're talking about it, but at least we can look at the setups. So there's the possibility of a pullback right there. Now, what we'd be doing is we'd be looking for being patient and waiting for the low day, the low day, the low day, and then a close above the high of the low day, or the possibility of a trend line break through price. In addition, we could wait for prices to break back up above this moving average. We're still not actually even below that moving average yet, but that's also a consideration. Now, for our targets on this trade, if we do get something later this week and we do put the trade on, let me show you what that could look like. You guys might be, I'm just going to let it sit there for 1 second so you can just kind of visualize where the targets might be. I'm going to go ahead and apply a couple more days of a pullback, maybe a pullback to earnings. Okay, so here might be the flag itself. Maybe it pulls back only here, rests near support. Sometimes it'll bounce around here a little bit. See what happens again over earnings. But if that unfolds, we've already got our pull in place. And that's right there. It's shorter, it's smaller for sure than what we're looking at with both Amazon and Kroger, certainly. But that's all we're looking to do. We're really just trying to capture that move if there is an entry point there, like a close above the high of the low day, like a trend line break. Okay, we could look to trade to our right through here would be the target one, or if I'm just eyeballing it here, folks, but if this is the price move over here, the price move over here would be just about like that, maybe somewhere over here in this price, just maybe above 60, probably close to 66 actually, right in there. Does everybody see that? But this is something we've been looking for in terms of a paper trade. Seeing what happens after earnings. Can it break higher? Can it move? If so, maybe it's got another move up that could possibly fit into that area. Okay, I'm going to take a quick look at the chat. Let's see. James says better to wait until after the Fed tomorrow. So that's another key point. So earnings announcements, economic announcements, news in the market where we could see additional, signs of volatility in the market. You can look for that as well, clearly, just to see what does come from the Fed. So I think that's a great point to bring up. We can wait for additional explanations. And the whole idea here, though, James and everybody else, are you getting a sense of what we're looking to trade? Look at Cisco. Its trend is a little bit different from the other two stocks that we looked at, specifically Kroger. When it has its move, look how much shorter it is. In fact, I'm just going to count a few of these. 1, 2, if I'm just counting this range right there, when it runs up right through here, 1, 2, 3, 4, 5, 6, 7. That was a 7-day, it ran up 7 days. The next one, 1, 2, 3, 4, 5, 6, 7. Okay, I'm looking at these moves over here. How about from here to here? 1, 2, 3, 4, 5, 6, 7, 8. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Okay, do you get the idea? It's already defining it. A lot of times the bull flags themselves as they make up the structure of the underlying trend. They're giving us a really good sense of, hey, what does that flag actually look like? What could the entries look like? How long does it pull back? How about its targets? Okay, so there's a lot of good information you can see just from the underlying trend that we are trying to trade with. Yes, exactly, James. You have to keep that kind of cued and in mind, and then have maybe a list of possible flag patterns, or you could say an inventory of flag patterns that you might be looking at and watching for signs that, as some might be developing better than others. Exactly right. But at least you're ready for them, and you've kind of thought through it a little bit. Now, here's another couple we'll look at real quick. Here's one on Boeing right here. Here is the Boeing setup. Now, Boeing has bounced back, and there's this longer term. It's really long, too. There's a long-term trend line break right there that we took up off that level. And by the way, that's a pretty big pull of a flag. Let's look at the development of this pull. We break down here, we come back, we get past earnings, we bounce around, we're still holding right at a very, very interesting level of prior highs. What do we call that when we break through? If we're above it, what was resistance is now perhaps support, right? It might be support there. So there's the possibility of a bounce coming up here, and we'll see if that unfolds. I think you guys might see where that pattern could move to. There is the price of the pull. If I'm looking at this off of the bottom here, let me just eyeball this long yellow line. See where it's coming up to right here? And that ties in actually to some prior highs that you get from time to time. A lot of times it'll run up to the prior high. But that's the question. Now, that's a prior high on a 1-year chart, but there might be more room for this stock to run. Look at this. Here's our weekly. Yeah. Do you see it now off the bottom? This is the weekly chart. I mean, Boeing's been down for a little while, but we are seeing, the development of a flag pattern right there. And what I want to do, just to put one under our belt here, I realize we didn't get a close above the high to low day, but it's a little bit more developing. It's a little bit more developed in terms of a flag pattern. We actually took out some highs. We're kind of resting at support. But just as an example trade, let's just do this right now. Let's say if somebody's going to put 100 shares on, it is, it's fairly expensive. I don't have the actual signal yet, but if we did break higher, what I could do is we could add to it. But for now, let's just do this. I'm going to go ahead and add in. While we have still some time left in the trading day, I'm just going to add in, make a purchase here of 50 shares in our paper money account. Okay, there's a confirm. Let's look at it right here. What we've got, I do not have like a potential exit set up yet, like in the form of a stop that we talked about in our disclosures just yet. But I just wanted to get this under our belt. I'm going to give you an idea where I'm going to be watching for this at. If the price of the stock does close below the low of this bar, what I want to do is I want to be notified of it so I could potentially exit. But you'll notice, I'll just put breakdown question mark so I get that sort of a text message coming through. Oh, I'm sorry. I did above the high of the low bar. You got to always, that's the default. So I click over here at or below. So what I could do is just say breakdown. For example, just a keyword there, click on create. And now I can watch this. But if it did break down and I did decide to get out, well, I've only got 50 shares at stake, not the 100. I'm looking for a little bit more confirmation to possibly add in another 50 shares. So in this class too, we talk a lot about, money management and adding to trades as they might be coming in as well. All right, so we could add if we were to get a close above the high to low day, for example, which we don't have, or a trend line break in expectation of the possibility of a flag pattern unfolding up top higher. Okay, so I want to show you one more, but folks, I'm just going to pause real quick and look for any questions. And by the way, hey, if you like these kind of concepts, if this sort of time frame resonates with you, the shorter term, looking at price patterns that will give us potential targets, potential entry ideas to get in at, yeah, smash that like button. Really appreciate it. And definitely, while I've got you here, and it's really easy and so simple to do, bottom right-hand corner of the screen, I think many of you here are probably already possibly subscribed already today, but if you haven't, definitely hit that subscribe button. Love to have you on board our Trader Talk. So we have over 140,000 subscribers right now, and we'd love to just get this content coming up for you more frequently on your YouTube feeds. But yeah, all right. With that, let's see. Let's go ahead and oh, awesome. Thank you so much. Great. Good to hear. Let's hit another one while we're at it here. And let's go ahead and check out Qualcomm. Now, this is interesting with Qualcomm. Qualcomm has been in a long-term sideways channel for a while. You can see this longer-term pullback on Qualcomm. And we're kind of holding into this range over here where we've got, well, really a history of similar highs and similar lows. But will we, is the question, see a breakout from the possibility of, you guys see it right there, this flagpole right there? Will we get a breakout? Well, here's the move. There's the consolidation. You know what? I'm just going to redraw it, and I'm just going to draw this in only so you can see it. Pull the flag, possible flagpole right there. Is that a flag pattern developing? Looks interesting. The cool thing about this is we are past earnings, and I want to show you something that we will frequently reference in this class, and that's this right here. We looked at the RSI. We've used money flow. We use volume indications in this class as well. We just didn't have time to cover all the basics for a lot of the new folks here today, and then also get into that, but plan on that in future weeks as well. But notice over here with me, we haven't broken out above the prices yet, right? We're still in that long range. But check out this. Look at the RSI. Did the RSI break out yet? We're looking for indications again, right? Because indicators can suggest continuation of strength for the stock moving higher. Reversal of that trend, a change in trend. This is a short-term change in trend. We might need a bigger one to get through this resistance, but there is a pretty substantial breakout. Let me change the colors over here and put this in as well. Here we go. Let's put this over here. So this is really trying to use indicators to our advantage and saying, hey, we've got some strength over here in terms of indicators, and keep that in mind, because we might very well be able to get the possibility of a breakout through this range over here, because indicators are suggesting strength. And look over here. Last thing, this very, very, very mild pullback here. It's holding a lot longer than these over here. Look at these moves here. See this dip? We came up, touch, dip, dip, dip. Wow, a lot of dips. Okay, but over here, we're really going quite flat. So let's look at this one too. This is the last one we'll add, and then we're all set. But if I just zoom in over here and highlight this to you, did we get a close above the high of the low day? Where's our low day? Well, this recent pullback, it's right there. We've come back up a little bit too. It's an expensive stock as well. I'm gonna go ahead and just do 50 shares on this one too, just so we have it in place. So there we go, there's our 50. We'll go ahead and hit confirm, and we always wanna read our dialog box as we come in over here. And then we're gonna go ahead and send that through. Folks, I hope you found this discussion useful and informative. One quick note I wanted to highlight just before we're done and wrapping up here, and I think Cameron actually typed this in, our playlists. Definitely tap into the playlist that we've got. We have playlists, and you can, like, there's a swing trade. There's the full playlist right there if you want to check it out for all of our classes within this group. I'm going to go ahead and click on that right now and just throw this into the chat so you have it. Where we have, if you want, in the meantime, to look at maybe some of the other classes we've done that have tapped a little bit more into volume, money flow, etc., for further indications of the possibility of a bounce of that trend. But hope you found this informative today. If you did, go ahead and smash that like button if you found that useful. Definitely consider subscribing to our group. It's been great being with you. Cam, thanks so much for your help in the chat as always. And everybody, have a terrific rest of the day. Look forward to future discussions in this class with you. See you next time.